Good morning, traders. It's currently 7:38 a.m. This is a continuation of my previous video. I'm following up with Euro GBP, GBP, JPY, and now I'm going to break down gold. We're currently in the money. I have a buy that I had opened up last night. You guys can check back on my previous video if you would like to see the recap to leading into this current move. And in this video, I'm going to just update you all with a trailing stop and a new entry based on what I can already see happening. And without further ado, let's get into it. So gold, let's take a couple steps back and look at the macro scale. We can see that gold on the 4-hour already gave us a clear indication signal that it was going to continue to the upside. But like I said, this is the worst time to enter trades, and you don't want to enter on the breakout. So what I did was I waited for a pullback, and it did pull back a significant amount, and then it broke back to the upside. That was my trade. At the time, I had a wider stop loss, and I had brought that stop loss to break even, and this is where I'm currently at. I actually brought that up in my Discord group. I said, gold update, move stop loss to break even. I said that this morning, so everything is already documented. And this is just following up with what we're currently at right now. So I do see a potential breakout to the upside today, and I do believe that price is going to go up about another 150 plus pips. So I'm going to go into the smaller time frame, which is the 15-minute, and I currently see that price is on its way down. So when you're looking at the smallest time frames that you could possibly see, you see area of support right there. So what I'm going to do is take the chart, mark up my minor area of support, which is these three taps right here, and then we can see price dip down below, and then briefly afterwards there was a signal right there, just peeked its nose up. So this is indicating to me that price is going to go up from here. I don't really believe price is going to continue to drive down, or else this would be another good indication for another trailing stop. So originally, before this move had happened, let's take it a couple steps back so we can put our minds in the time. So, okay, upon the drive down and a bounce back to the upside, what do we see? We see a potential range being formed. So right off the rip, I wouldn't put my stop loss down below there. I actually put my stop loss, I wait for a break slightly above here with a small stop, and that didn't happen. It bounced off once again. Nothing was triggered. Nothing's getting triggered, and then all of a sudden we have a drive to the downside continuation. So we're going to take another minor area and put it right here. Minor area of resistance. Very simple, very easy. So we're actually going to wait for price to break this minor area of resistance before considering it an entry. So what I'm going to do is put a buy stop right here. And the widest stop loss that I can place right now is just either at these lows right here, that would be ideal, or anywhere down below here. Personally, I just put it right here. It was 1803.20. And so this is where I'm going to place my stop loss. So worst case scenario is it falls back down, I lose 230 GBP, which is definitely still a good portion, compared to what I'm currently, I'm already up. So it would be more than break even if I did get stopped out at that point. Now, as far as entry goes, I don't really want to put my entry just yet, although I can. I don't want to enter an entry just yet, but I can. Gold tends to move in different sessions, as we can see when we're looking at gold from yesterday. It actually consolidated in Asia and started moving up during London into US, and then it went sideways in the US. Right now we're actually seeing the move contract and go back down. As far as it could go down 28, 30 pips, I do believe gold is going to be somewhere around here at some point today. I do believe gold is going to reach somewhere around this zone some point today. And what I'll be doing is I'll be looking for entry down below at that point. if it does not break to the upside. So we already have our move marked, our entry marked if price does go on the upside and go to the break, but we also have our, you know, potential pullback because of current market direction. So we can see the directional bias is actually pulling price back towards the downside. I'm going to just wait on price, be patient, do not take any counter trend setups because, like I said, that's something that, you know, I would have to go all the way down to the minute, break it down, get into a bunch of confusion, and I don't want to do that right now. And I did highlight my primary reason for avoiding counter trend setups in my previous video, so check back on that if you did not view that already. So we have a setup now. I want to go for a potential exit. So here we go. It's very obvious on the time frame where the exit's going to be. It's going to be around 1829.68. That's going to be the exit. So 1829.68 is going to be our exit, and that's going to give us a very good reward to risk ratio. About 200 pips rounded up is what we're looking for reward, and about 80 pips is what we're looking for the risk. So it's about, you know, 3-to-1 reward to risk ratio. That's a really great setup, I believe. I believe the stop loss is within the range and parameters of a daily stop. Since I am day trading, I'm going to only be looking for daily stops, and right now it's currently trending up. So just continue to wait for gold to print its move, and we'll follow up with that along the way. Now, one thing that could also happen, I want to highlight the, you know, the good and the bad and the ugly. And so price could go up, it could tap my entry, it could go back down, and at that point we don't really see another area until, you know, where my current break even is. So we can see it's time to adjust the stops, adjust the parameters, adjust the entries, and that all this is right now is just trade management. It's been a good trade. Don't throw your profits away. It's always a good thing to mark up your charts, try to scale out of your positions. It's a very important part of the process because the markets are very unstable and they could end up just messing around and bringing you back. So at this moment, I'm going to actually exit my buy, bring my stop loss up actually. So if price, it's currently at 85.3 pips where I'll stop myself out. If price continues to go down and it actually taps 1801, that's when I'll be exiting this current long. But if price can continue to go up, then I'm not going to exit this long. As a matter of fact, you all, I'm going to exit this long right now because I already have indication that it's going to continue on down. So, you know, let's just exit it right now. Now that trade's officially over. So, yeah, just to break it down, I already got a signal that it was going to continue down, and it's just, at that point, it's just like, why would I hold a winning trade when price is going against me, when I could get out that winning trade and get back in when I have the proper signal to get back in. Now, what we're going to see, this is why I kind of wanted to stay in my trade, is because I already got a signal that it's going to be moving back to the upside. I said that I wasn't gonna go into the minute chart because it's too complex right now for me to really explain. Something I'm still getting familiar with, but I already see a move pointing to the upside. But I definitely would like to just continue to monitor the 1 and 5 minute chart for a potential entry. That would actually save me some pips. So this is gonna be my daily entry, but I could probably find a position that can scale into that entry, and that would be ideal because then I'll have 2 entries with the same stop, giving me lower risk and more of a maximum reward. And that's what I'm going to be doing as the London session gets closer. Is I'm just going to just monitor this little movement right here between 1807 and 1803. I'm just going to be tracking this on the 1 and 5 minute. If I can get some sort of solid within the next couple hours, if I get some sort of solid range, that it could break out into, then I'll take that trade, just like how I just broke it down for the bigger time frames. I'll be doing the same thing with the smaller time frames. So we'll take that along every step of the way. And I hope this video was informal for you all. I'll follow up on my midweek breakdown video. All right.